Investment banking. Some of the bank's customers are very smart and very demanding good boys, like the Malamute. These dogs work together in packs called corporations, and their business is buying and operating sleds to help humans move around snowy places. When the Malamutes want to expand their territory into a new snowy place, they ask for the bank for advice on what sled pack to buy, how many bones they should pay, and what method they should use with their bones to acquire the new sled pack. This is called M&A advisory. The Malamutes can buy the sled pack in a few different ways. They could buy it with 100% of their own bones. This is called an all-cash buyout. But then the Malamutes pack would struggle because they need a certain amount of bones to operate their sled company. So another option is to buy the sled pack with half Malamute-owned bones and then borrow some bones from the bank. But because the bank can only lend so many bones to each pack of Malamutes before it gets in trouble with the human rulers, the bank needs help. So the bank temporarily loans the pack of Malamutes the bones in a process called underwriting, whilst the bank finds other investors to take up parts of the loan in a process called distribution. This means eventually it is not the bank lending the bones to the pack of Malamutes, but instead a group of investors. This is a complicated process, so the pack of Malamutes must pay the bank lots of bones for the advice on which sled company to buy, and for the bank organizing the borrowing of bones via lots of investors. In order to convince the investors to lend bones to the pack of Malamutes, the Malamutes need a good boy rating. This is a globally recognized badge of honor for the Malamutes, and in order to get the best good boy rating possible, the Malamutes must pay the bank for ratings advisory. The bank will teach the Malamutes how to behave and how to look after their bones properly, and if they do a good job, the ratings agency will give the Malamutes the highest good boy rating. Corporations with the best good boy ratings are able to borrow bones more cheaply than corporations with naughty boy ratings because they're less likely to nibble or nom-nom on their bones. This is Billy, and he's a very good boy. Billy has found many bones, but Billy not trust to dig and bury bones in human's garden, because neighbor dog Tom is not a good boy. So Billy goes to bank. Bank stores bones, very safe for Billy, but bank not charge Billy, so bank must lend bones to other good boys and charge them for borrowing the bones so bank can make bones for its shareholders, the humans. But not all dogs are good boys, so bank must learn about each breed of dog, as some are aggressive and will nom-nom or nibble the bones and not return them to the bank. So each dog breed is given a nom-nom or default probability score, and the bank sets rules on how many bones it can give out to each dog breed. If the bank lends out too many bones relative to how many good boys have buried bones with the bank gets in trouble with the human regulator, who makes the bank give it some of its bones as punishment. International payments. Billy has a friend who lives far away in a different country, who Billy wants to send bones to. Billy must pay bank a small number of bones to do this, but much better than Billy taking the bones himself, as Billy has little drumsticks and cannot swim. So Billy asks bank to send bones to friend, but bank doesn't have a branch in the other country and cannot send the bones directly. So bank must first send bones to its friend, correspondent bank. Correspondent bank then sends the bones to Billy's friend in his bank account. If you liked this video, press the Give Bone button below.